Hello, today is Monday, August 3rd, 2026. Here is your daily signal. According to Bloomberg, Indian companies are preparing a new round of price hikes as consumer prices surged above the Reserve Bank of India's 4% inflation target for the first time in nearly a year and a half, driven by food and fuel costs. The recent jump in inflation comes after 18 months of relative stability, with food and fuel recognized as the main contributors. It's prompted policymakers to revisit the RBI's interest rate moves and triggered a fresh wave of price adjustments across consumer goods sectors. Key facts include that consumer prices rose above the 4% benchmark in June 2026, breaking the RBI's stretch of target compliance since early 2025. And several major firms now publicly plan to raise prices further amid unrelenting input cost pressures, as noted by Bloomberg. In the short term, these price hikes are expected to further squeeze household budgets and dampen consumer spending, possibly weakening confidence and slowing the retail recovery, while over the medium term, persistent inflation may push the RBI into more aggressive monetary tightening, potentially affecting GDP growth. Meanwhile, there's a risk that while companies maintain profitability through higher prices, demand for non-essential items could decline if these trends persist. Fortune reports that Chevron delivered its largest ever quarterly profit and Exxon's income soared as the Iran conflict constricted global oil supplies, creating near-record fuel prices globally. Geopolitical tensions between the U.S. and Iran escalated through mid-2026, disrupting oil routes, spiking crude prices, and echoing a historical pattern where major oil producers boost profits during Middle East turmoil. These disruptions have shifted the balance in oil supply and driven up revenues for Western energy giants. The latest figures show Chevron and Exxon capitalizing on the situation with record-high earnings in the wake of supply constraints, as Fortune documented on July 31, 2026, with the company's actions linked to both market manipulation and deliberate supply limits. Short term, this has meant higher fuel bills for consumers and rising inflation in both U.S. and European markets. Beyond that, markets may see more volatility, regulatory scrutiny of oil company pricing, greater industry consolidation, and heavier lobbying for government influence in petroleum policy. There's also concern that these profit spikes, propelled by conflict, could slow down global climate action by fueling further fossil fuel investment and expansion. Next Big Future writes that the latest open-source AI models, like DeepSeek, have become almost indistinguishable from proprietary systems for the vast majority of tasks, so much so that the premium market for closed AI is at risk of collapse. With open source closing the performance gap by mid-2026, the pattern echoes earlier technological shifts. When something essential becomes free and abundant, its industry often declines, as history has shown in telecommunications and utilities. Key industry players such as DeepSeek and other open projects now drive a challenge to established business models. Traditional AI brands like OpenAI, Google DeepMind, and Anthropic face commoditization threats, with more stakeholders from cloud providers to policymakers watching closely. The primary fact is that, as of August 1, 2026, open models are functionally equivalent for 95% of queries, undermining the rationale for monetizing most everyday AI tasks. Near term, this means many AI services behind paywalls or subscriptions could become financially unsustainable, pushing larger firms to explore new forms of value or data integration. Smaller startups may need to merge, pivot, or move into consultancy products. Over the medium term, the broad release of high-grade, open AI could also make regulatory and ethical oversight more challenging as advanced tools become widely accessible. Now, onto the markets. International equities saw mixed performance, with Germany's EWG up by roughly 1% while Belgium's EWK was the weakest, down about 1%. France, Italy, and Spain posted modest gains near 1%. United Kingdom's EWU slipped by 0.6%, and China large-cap FXI held steady on the day. Commodities were generally softer, as gold GLD declined about 0.3% and silver SLV slid by a similar margin amid broader commodity weakness. U.S. oil USO plunged over 5% to lead sector declines. Uranium URA stood out as the top gainer among commodities, jumping over 4%. The S&P 500 SPY climbed nearly 1.3%, with Microsoft MSFT rallying above 5%, while NVIDIA also advanced strongly. Healthcare Roman 45 slipped almost 0.5%, and semiconductor stocks finished flat on the day. In standout movers, Ritter Logtech Holdings Ritter soared over 450% as the day's leading gainer, while Agriculture and Natural Solutions Acquisition Corp warrant ANSQA plummeted by almost 96%, the sharpest loss among all tracked names. That's it for today. You can find more news and details on our website. Goodbye.